4-hour candle with no bottom wick, it means price is about to completely reverse. This is a normal 4-hour candle. You have your open, your low, your high, and your close. And this is the low time frame makeup of the higher time frame candle. In here, we have accumulation, manipulation lower, and distribution higher. And if you'll notice, manipulation is what causes the wick of our higher time frame candle, which means if there's no wick here, then there was no manipulation, and price has to return to that level. Looking at this 4-hour chart, you can see right here, we formed a 4-hour candle with no bottom wick. So I'm going to draw that out. After market open, we tag into an hourly bearish fair value gap, and we get SMT on our 15-minute between these two highs, NQ putting in a higher high and a lower high, and ES putting in a lower high and a higher high. We then have a bullish 1-minute fair value gap, which gets closed below right here, turning this into an inversion and allowing me to take my entry, targeting that 4-hour candle low with no wick. Let's play this out. As you can see, we did hit that target. Well, is the exact reason that I'm funded multiple 6 figures, and it's the key to me taking insane trades just like this one. Give me 60 seconds and I'll show you exactly how you can use this level in your own trading. Here on our higher time frame chart at around 8 a.m. Eastern, I'm looking for an obvious change in the state of delivery, which we get right here when this 30-minute candle closes above this down close series of candles that swept this liquidity, which as you can also see is what formed this 4-hour candle. Inside this range here, I'm looking for a high time frame fair value gap. In this case, we have this 30-minute fair value gap in which we will expect price to return to before going higher. And if I skip ahead a couple candles, you can see that we do end up tagging back down into this gap. Now, it's important to mention we don't want to see a close below this gap, or else it will turn into an inversion gap in which we'll head lower. Now, while we did tag into this gap over here, none of this happened during a macro. But as you can see here, if I skip ahead, here's our macro, and here's another tag into this gap. Now that we've tagged back into this gap, I need 2 things. SMT, which we have between these 2 candles right here, and an inversion gap to take the trade on. Here's our bearish gap. We want price to close above this so we can take an entry long. As you can see, price ends up closing above this fair value gap, making it an inversion gap and allowing me to take my entry. My stop can go below this SMT. And for my take profit, I will just target the high of this 4-hour candle. Let's play this out. As you can see, we hit our target in about 5 minutes. The indicator gives my daily bias in under 10 seconds. It's called the OHLC stat map, and the way it works is insane. If I hop on my daily chart and zoom all the way out and go all the way back to the very beginning of my TradingView data, it gives me 26 years worth of price action. The stat map takes every daily candle in this massive range to automatically plot these manipulation levels. Taking a look at this example on the hourly chart, we came down to bullish manipulation and closed above it during our 10 a.m. candle, so my bias is going to be bullish. Down on our 1-minute chart, we tag into this 15-minute bullish fair value gap, which is just below bullish manipulation. We then form a bearish 1-minute gap, which gets closed above right here, so this becomes an inversion, and this becomes my entry, with my stop below this low. And I can simply target external liquidity. Let's play this out. As you can see, we hit that target. Stake with fair value gaps could cost you thousands. Trading low time frame gaps with a complete lack of high time frame narrative is one of the easiest ways traders get trapped. So let's start with our higher time frame and see what we have going on. Here is a 15-minute bearish fair value gap, and we just broke past this low as we did that, so we can assume that price is bearish. On your lower time frame, you have a 1-minute sweep of liquidity. 10 a.m. opens right here, and if you didn't have the narrative, you might have just tried to catch this 1-minute gap. But since you have this 15-minute gap up here to wait for, you'll know that that's the draw, and we have to wait for that before actually taking our trade. But as you can see, we do get this tag into the high time frame gap, so now we can look for step 2. All we need now is SMT divergence, which we get between this lower high and higher high on NQ and this higher high and lower high on ES. And now for the most important step, after we've tagged our high time frame gap and we form SMT, I need to see some sort of inversion gap back out. And as you can see, this bullish fair value gap gets closed below, so this becomes an inversion, and I can take my entry short. My stop can go above the SMT, and we can target a 2R. Let's play this out. As you can see, we did hit that target. Daily candle with no bottom wick, it means price is about to completely reverse. These candles are called devil's marks because they signify reversals before they happen. So how do devil's marks actually work? Here we have a normal daily candle, and this is the makeup of that candle on the smaller time frame. In this makeup, we have 3 main sections: accumulation, manipulation, and distribution. If you'll notice, manipulation is what makes up the daily candle's wick. So if there's no manipulation, there's no wick. And if we see something like this in the marketplace, we already know that these equal lows will serve as a draw on liquidity. And if you mark this devil's mark out on your chart, right here we have our 930 open, and we trade up into a high time frame inversion gap. We then get an entry right here. Once we form a change in state of delivery, here's our entry, here's our stop, and if I zoom out, we can target that devil's mark I drew earlier. Let's see how this plays out. As you can see, we did hit that target.